This
Good
conference will
morning,
now
all.
be
It's
recorded.
8:26 a.m. It's Friday, the 12th of March, 2021. Week from now is spring equinox, or beginning of a spring, which will be Saturday, the 20th. As you recall, last year at this time, that was a turning point, as discussed in the webinars in advance. And also in writing, we gave it as a potential in writing. Same thing, I should say, that was in the webinar as a potential, because nobody knows. But we thought that's a possibility there. It did. Okay. You guys can hear me fine? Perfect. Okay. All right. Gotcha. All right. Let's get started here. 8:30 is coming up. So I have no housekeeping items to report. Nothing major, nothing critical. Just work continues here, a couple of projects I'm working on, and then trying to take a little bit of time off for myself too. So, so let's move on to Econ Calendar, and for that, by the way, I wanted to show you also Market Watch if you're interested. That's good there too. It gives you a perspective, and also you could see some of the key ones, what they're expecting, and so on. Okay, and then it's reported. It gets reported in after the results come in, and that's the following week. The problem with that Economy Days, it only shows 1 week. Okay, here we go. All right, so what we're looking for is PPI number in 2 minutes or thereabouts. I think it's got to be muted. PPI drives actually CPI. If CPI is good, then PPI should be good by deductive reasoning, but we shall see. Okay. Let's see. Suzanne is here too. Bravo. Okay, guys. So that's what I would look for. The numbers look too small. Here we go. That's a little bit bigger. You could see what we're looking for. I think it should be in line. The next number we should look at is consumer sentiment, and this is a green report, but I would caution you to also keep an eye on it. Consumer confidence, consumer sentiment, they're both crucial, I think, to watch. And this is U of Michigan, and they're looking 77 to 81. Last was 78. I'm sorry, 76, 77 almost. Consensus is 78. We'll see. Yeah. Okay. Nothing else here. This is the second week. Next week will be third week, which would be expiration. Obviously, it will be slightly muted early on. And then we have to look for reversal possibly on Wednesday of a prevailing trend. And then, of course, what kind of cash settlement we get on a Friday. That's so much for the morning brief. I don't see anything else here. It's not It's not the first week or last week. Those 2 weeks are heavy, And third week you got expiration. So we covered the 2 trades here. I mean, 2 data points here. One was CPI, and then PPI here. What was the CPI? Right there. That was a big move. And jobless claims. Let me look at that. To me, that's a weekly issue we got to deal with. It came a little bit better. That's right. I think Nancy reported that. Okay. By the way, the CPI should be coming out. Of course, it won't report here that fast, but should be here. I use Street the TradeTheNews.com. Okay, there you go. Here comes. There you go. CPI. I'm saying PPI, 0.5% versus no, point half. No, I'm saying 0.5%. Yeah. Okay, hold on. There you go. It came in line. 0.5% versus 0.5% year to year. 2.8 versus 2.7 estimate. Yeah. You'll find that Trade the News is usually ahead of CNBC and everybody else. Here's come Ricky. All right, on CNBC. All right, good. That's a paid service. I'm being comped, but just for FD full disclosure. All right, moving on. Let's go trade the PMT portion of the package here. We made a new high yesterday. I'm just selling it now. We are. Remember, we're also trading the M contract. Okay, the volume has not crossed yet. I'm going to be very clear about that. Here's your volume. Look at that. But we're almost there. 204 in the H contract, 183 on M. Same thing. You can see more pronounced on the NQ side. All right. But we've already switched our systems to look for M21s. And we're up, we're down 9 handles here, 9 handles, and 162 on NQ. Okay. So let's come back to the charts. Timer charts, please. There you go. That tastes good. All right. 127 versus 91. Beginning to get into overbought area. I think this is short-lived. I think you're going to see some catch-up here. Unless we have more selling. Okay. All right, so let me take a look at this. This is 16th to, what was that low down there? To 5th of January. Okay. Got a cross coming up on CI slowly. We're at 60 on breadth trust, so we're not overbought yet. Here, we're not overbought either because you need 150. No way that you don't even have 100 yet. So fundamentals haven't changed. The economy is resilient. We have a lot of productivity gains, and the cavalry is on its way in the name of vaccines, and more vaccines. And most important, probably better than anything else, for the first time, the intelligentsia, this is the money people, both cash and both IQ and cash, are saying we have adults in the room. So there's a confidence level that's rising there. We should see that. Okay. We're gonna get some noise, but that's just, that's part of politics. Ignore that. Time and price. Okay. Well, I'm sorry. Time, price, and volume. Time, price, and volume. Okay. New highs. You bet you. We broke 32, and I think it's a matter of time to get to 33. Maybe around 36. I'll start worrying about, but not right now. Yeah. We're still below 3 sigma if you look at it carefully there. Better way to look at it is really SPX, not the Dow, because you got only 30 names. Doesn't have a big percentage of U.S. equities as a whole. SPX is a much better representation. Now let's do a deep dive here quickly. Hello, you get your trans. We talked about this from here, right? We said this got to rotate. This got to rotate itself and show it. Otherwise, we're not going to make a new high. And then as we did, look what it's done. Boom, 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 boom. And now we also warned you the last briefing that watch for, which we were here 2 days ago. I'm saying here to say before this day was end, obviously. Yeah, it was. This was the close. This is a Tuesday night, correct? And we said, look, this thing is going to come up new highs. If it does, it's just a matter of time for NDX to follow. That's the correlation we're running right now. Fairly high correlation. Russell with the NDX and translation has always been for SPX. So remember MAC? Yeah. MAC looks at certain names along these lines and uses them to MAC Plus. That uses on a short-term basis to predict what the ES and NQ ES should be, not NQ, but ES should be, by looking at a percentage of the contributions of these names. Okay. Now, what are we doing here? This is the trend. The trend is 8 out of 8. Oh, I'm sorry, 7 out of 8 still. We have one that's negative. This is a 50-day. We almost touched it yesterday on in NASDAQ 100. So numerically, if you're looking at a scoring indicator, we're 7 out of 8. That's very healthy. We should see. Now, once you get 8 out of 8 for a while, and these values are a little bit higher, then I would forewarn you, because that's where we were up here. Yeah. So if you go back these timelines in November, in early January, these are all warning signs that something is awry and could come. Of course, we'll have more stuff to show you on the other side. 1 second. Okay, SP1 Momo. SP1 is a 2 plus in terms of value there. It's somewhere in there. Let's see if I can pick that. There you go, 40.98. Okay. You'd see between 2 and it's a little bit. Is that 98? Yeah. Okay. So it's above 2 sigma, below 3 sigma. A little stretched. I would like to see it between +1 and +1 and +2. We are above that, so we're between +2 and +3. Okay, +2 and +3. So a little bit stretched. We gotta watch that. The short is smaller, more quicker brethren. Is Momo at 341, fairly neutral here again. You can't deduct from the angle where it would be heading. That's not very smart. It hasn't worked that well in the past. But as we edge up, then you get a magnet effect. So if we can get to 7.5, 8.5, then we can run to go for 10. That's overbought. That's done deal. That's overbought, and that could be shorted. And the reverse is also very true, probably more correctly on the downside because of what? Greed, fear. Fear is more pronounced. Okay. I know I can pick bottoms a lot better than I can pick the tops. Why? I don't know. That's all I have. Can I change it? I've tried. It's not that easy. Trust me, it's not. So, all right. Okay. Morning, Michael. Robert, good morning, sir. Okay. All right. So that's where we are there. Now, in terms of 52 weeks highs and lows, lows are meaningless right now because of where we are. On the highs, we have on the weekly level, this is what this week is. The high of this week was 117. Well, today it's not finished yet. I mean, it hasn't even just started, but 117. So we don't have a value of 140, 160 to peek at us and say, hey, watch out. We're not there yet. So we'll see how we built today or Monday for that matter. We're on a new buy there. System went to a buy. Remember, this is trend following, so there's got some delay. And you could get some whipsaw. And here's the weekly. On the weekly, where we have been a buy on since 619. Very mechanical. Have not touched it. Any parameters. You don't need to pollute your indicators. Keep them clean. Yeah. So now we have buy and buy. This went long last night at the close. Okay, what's wrong here? Okay, this is a VIX complex volatilities. Okay, there we go. Again, there's a chat with a learned friend of mine out of right down here, Florida. Very decent trader, and we talked about this issue last night. He called to just talk over what my view of vols were, and I said I'm disappointed this is not dropped. So we have some internal issues here we have to work out. That may explain why we have such high ATRs. And futures trading is not that simple right now. You have to be extra careful. Okay. Hold on. Someone's you're an audio pin. Okay. Yeah. Please make sure you're muted. Okay. Yesterday we were not muted and for a while and messed up our recording. I would ask you please to make sure you're muted on your end. If it was just that nobody was speaking, it was just an open mic. If that continues, we may not be able to host you. So that's all we ask. Just keep yourself muted. Thank you. Okay, you have any issues, you can post in the chat room, especially the tech support room, so I can keep a quick eye on it. Of course, others are there to help me. All right. This is the one I want to talk to you when we talk about SP1 and where we are in these peaks. This is the SQ I'm going to talk to. Came in at 140, slowly rising, which is in line. As we rise up, the tail risk becomes more shinier, more enticing, if you will. If we're very low, we've already accomplished that right down here, for example, or this drop or that drop. You see what happened there? It's already accomplished that. It's not, by the way, it's not mirroring. There were ESs, no, or SPXs, no. But because it is looking at the tail risk of the SPX puts, it's natural to see some correlation in that movement. Okay, what we look for is a peak readings, either very low or very high. And how do we measure that? In each swing, there's a sigma channel. So if you put it on, you could see relative to except where we are. Our last signal was mid-August. I would say mid-December, and we've said that from that point on, the 17th, day before my birthday. I kept on saying, guys, we have a forward risk coming up because it's gotten too high. Again, design limit is 110. I'm saying 100 to 150. Obviously, we have not traded that range. We have shifted up. The low has been 111, high 159. This goes back, I think, 7 years or something like that. Okay, let's go to TD. Notice we've changed also to M21. Quick look at volume, about 12,000, no, 21,000 separation on ES and NQ. So this could be at this rate, I'm thinking this could be like first hour rollover. or top of the hour, 10 o'clock Eastern, the volume should swing. We've already gone to M21. I'm not going to be stuck there and get caught. Volume is plenty. I'm just going to be a little bit cognizant of that and not go too crazy on the OTF chart yet until that crossover happens. The problem is that neither of them are perfect right now. That's what we're facing, right? One is dwindling blocks, one is rising. So we'll see that cross here sometime. Just be patient. And the way you look at it is the SET. No, wait a second. No. Erase that. SET is next week. Yeah. That's the settlement. No. This is just physically is what you got to look at. This volume rollover. So we're not there yet. 4.69. So this says we're rising. Okay. If it was let's say near zero, then that would be the bottom. You see what happened down there? See that was -1 down there as a bottom there. Let me go there for a second. I want to check that site on SPX customize. Okay, where's my scaling? Yeah, that's fine. And then subgraph that. Okay, a little bit more. Okay, so we want to see the bottoms. We want to see that was a low on the chart when the price movement came in. All right, so you can see right there. Okay, and pretty decent divergence there. So you could come up with divergences all you want. It's there, yeah. But you just have to watch it carefully and then be fair about it. Don't tilt it too much in your favor. But think of it as a pure signal if you can. If it's not there, it's not there. You can't make it up. All right. SP2 is at 70. It pulled back. It was a little bit higher yesterday, as you know. We were flirting with 73, 75 area. We closed below that. These are end of the day. It doesn't trade pre-open for the pre-open of the cash market. Rendezvous time, it's done, in my opinion, to the downside. Now we should be shooting up for another rendezvous on the upside. So, yeah, slight delay there. I realize that, but you could see how fast these moved. Yeah, this is there you go. Yeah, that double bottom down there. Yeah, it corresponds to the low. Yeah, I just didn't know. I just had to put this in to look it up. Yeah, but yeah, just been trained on that. So Treasuries. Let's go to Treasuries. This is talk of town. 1.5. You notice that pending home sales had a lot of cancellations. Then people dropped out of escrow. They get short-term government funding, cars, home, long-term insurance obligations, 30-year. You want to hear a funny story? I used to think that the 30-year is like 30-year mortgage. It's not. That's not what drives it. The 10-year drives the mortgage. This drives, insurance companies, long-term obligations, so on and so forth, pensions and all that. Hi, Dave. How are you? Good morning, sir. You're getting here a little bit toward the end, but that's okay. We so far we've been doing this on a video basis. We may go to streaming. We want to experiment with that, where YouTube will stream. You just jump in, and then and also it post processes for it immediately by itself real quickly. Here right now we're doing two processing. One is go to meeting, then we get the file, then we have to upload. We don't have to post process, but upload. Well, no, wait a second. We upload to YouTube and YouTube processes it. Yeah, so we'll see if that works and if it helps out better. It'll be archived same location. You won't miss it. Okay. All right. That's that on that issue. Let's move on overnight what we had. Again, here's our overnight picture. Notice that we're running M contracts again. Okay, we've accepted the rollover as is, mainly because by cash opens, we don't want to be chasing symbols on the servers. It takes a while, yeah. It takes a while to download, and it's too late by then to try to be able to catch the open and all that. So, all right. Overnight, we've sold. These are sigma levels for 30 minutes. You could see when it starts hitting the 3 sigmas, the CI diffs are really showing slowing down. And you could see, for example, see 3 or 4 bars before the low was put on CIDF. That's the beauty of a strong indicator. We'll be ahead of the curve. Pulled up. Archives were posted. Excel pluses we're using for those. Be warned that by early next week we'll be on K contract. And I'm sorry, we have not posted M levels. We've posted H levels. But tonight, when we'll go right over them for this week, second week of March, there will be M21. But for now, we've already rolled them over. Okay. Again, we're working a lot on this, and we plan to have a webinar on this. This is a combination of ATRs and the bubbles from Happy Expert, and will be added to Happy Expert. Not a fancy thing, but what we're trying to make sure that we have developed the rules for you. And how do we know that? You look back, you back test something, okay? You come up with some rules. Then you have to forward walk it and make sure the rules are still working. That's phase 2. Phase 3 is like trials before you submit to FDA. Phase 3 is live training, where you don't even have data to look at. Okay, it's live. It's coming in. It's got to make sure there. We're in that phase 3 right now. Unfortunately, we're not ready yet. And the test, the high bar is for me to teach a Roman how to trade. A good candidate for that Roman is Mark Esposito. They're as Roman as they come. Yeah. If the Roman can get it, that's easy. Everybody else can get it. Remember Mikey? Does Mikey like it? Remember? Yeah. The cereal commercial. Yeah. So this is Marky, not Mikey. Marcus Anthony. Yeah. That's actually his middle name, Anthony. Yeah. I'll call him Marcus Anthony. Out of Julius Caesar. Yeah. All right. So we'll talk soon. Anything else? Any questions for me? Again, be aware of the rollover using the OTF for today for these two names. Okay, J20 CL is fine because that's very mature data there. So it's actually a couple of days left, calendar days before it's going to CLK21. But these two are fragile. They just came in and they haven't even crossed yet. So that's what we'll be shooting for. Hold on, come on. Okay. Again, one more. Oh, there you go. This is the two numbers we're looking at. We're 20,000 away, so that'll get mitigated shortly. This morning, and we're done. Any questions for me? All right, guys. We'll try to do this a little bit sooner than as sooner each day, so it will be better for me to get it out of the way and be ready for the open. Okay, guys. Thanks. Closing the webinar now.